The board of Sundance Resources has accepted a higher takeover offer from China's Hanlong Mining. Hanlong already owns 19% of the company, but in buying Sundance outright, it will have secure access to a major iron ore mine in West Africa to help feed China's demand for the metal. The market seemed to like the $1.65 billion offer, with Sundance shares jumping 10% on the news. Emily Stewart reports.
Sundance's biggest attraction is the Mbalam iron ore project, which straddles the republics of Cameroon and the Congo and is expected to produce 35 million tonnes a year for at least the next 10 years. But the development has come at a terrible cost to Sundance. Its entire board was killed in a plane crash near the mine in June last year.
The staff of Sundance, who got the company through the traumas of last year and have made this project happen.
The offer from Hanlong Mining, which is a subsidiary of Sichuan Hanlong Group, is based on 57 cents a share, a 65% premium to the average price over the last month.
The price of Sundance stock increased from late September 2010 from around about 15 cents all the way up to this deal now where Hanlong is offering 57 cents. So that's almost a 400% gain on the share price in close to 12 months.
They think they paid too much. We think we didn't get quite enough, and I would think that probably means you got it about right.
Hanlong had made a previous bid of 50 cents a share, and while Sundance says they've pushed hard to get a better price, analysts say it hasn't actually cost the Chinese company any more.
50 cents 2 or 3 months ago and 57 cents today, to the Chinese it's about the same because the Aussie dollar has fallen by about 15%.
The chairman of Sichuan Hanlong Group, Lu Han, said in a statement, "We have always believed Hanlong was the natural developer of these projects and we intend to move forward with the development accordingly."
A lot of the Chinese investors are looking at long-term growth in these projects. They're looking at vertically integrating themselves. A lot of the steel makers have bought a lot of Australian iron ore operations with the aim of securing long-term supply of product for their steel mills.
The rise of West Africa as a mining destination will mean greater competition for Australian projects.
Iron ore projects that are looking to come on stream in Australia, especially the greenfields projects, are having to compete seriously against projects in West Africa and elsewhere in the world. And the Chinese don't care where they get their iron ore from. They're not scared of the political risk.
The deal could face further hurdles. ASIC is currently investigating Hanlong employees for suspected insider trading in relation to Sundance and another of Hanlong's takeover targets, Bannerman Resources. The Sundance deal is also subject to an independent expert report, as well as regulatory approvals by Australia and the republics of Cameroon, Congo and China.